I just had the opportunity to sit down with Bryan Burke from Nexa Mortgage. He's a loan officer, an investor, a financial expert, a consultant, and a coach, and could be your next financial partner in your home buying experience. In this video, we are going to discuss the current interest rate environment for home buyers, how home buyers can navigate this environment with special loan programs, and also how working with a mortgage broker who has lending partners themselves can be an advantage to you. I hope you enjoy this video. Make sure to like and subscribe.
Interest rate environment. This is being filmed on May 2nd, 2024, and we actually just had a Fed rate decision yesterday as well. So interest rates are really on the top of everyone's mind right now. How would you, as a real estate lender and financing professional here, how would you characterize the current interest rate environment for home buyers?
The interest rate environment today is not as good as it was during the pandemic when we got spoiled with the 2 to 3% interest rates, right? We recognize that. I don't think, I could be wrong about this, but I don't think we'll see that low interest rate environment come back anytime soon. So what we have to do is get readjusted to what the traditional normal is or was, right? So like I said earlier, these rates that we're seeing today are not really any worse than what we had back in the 2000s, right? Like 2003-ish timeframe. So if we can come to grips with that, sure, we're not going to get as much house for the dollar because people's paychecks aren't going up as fast as the interest rates went up. But does that mean that you could not get yourself into a house, get yourself into an investment property that would appreciate over time, potentially, right? Always that disclaimer, because there's no crystal ball to guarantee that. But at the same time, start building some equity in your own property. And the answer is yes. So don't let interest rates in today's environment stifle you from taking action. I guess that's the big takeaway that I would have for you today. Because if interest rates came down, next year or the end of this year, and they dropped a point or two, then you can refinance, right? You can refinance it and bring your mortgage payment down and give yourself a payday from that perspective. So yeah, the rate environment right now, I'm looking on Bank Rate, right? That's a great website for all of you to pay attention to on interest rates. And, the APR, annual percentage rate right now for a 30-year fixed is anywhere from the low end being quoted out here of like 6.6% up to about 7.7% with Bank of America. So it's a pretty wide gap, but at the same time, 7% as an average is not a horrible rate. So we're starting to see more people come to grips with that and start taking action and buying properties, seeing a little bit of an inflow during the on-market season here.
So that brings up a good point with the interest rate range there being almost a full percentage point. And so any home buyers that are listening, how can everyone's going to want the lowest rate possible, potentially. Yeah. How can they work towards a 6.6? Are there kind of tips and tricks? How can they really get mortgage worthy to get that lower rate right now?
Well, I would say that your lower rates are going to come from you being in a position to put down 20%, right? And look, if you can't, you can't. There's programs for folks that don't have a lot of money, right? We have down payment assistance programs that are like grants, if you will, that have forgiveness attached to them. They'll forgive that money. So you can literally not have the down payment and minimal closing costs. And hey, if you get seller concessions, maybe you got very minimal closing costs as well. So please, what I'm saying right now, understand that I'm not trying to exclude any of you that may not be in this capacity, but we're talking best rate, right? How can you position yourself to get the best rate with the banker? And that is, get yourself 20% down on whatever it is that you're going to buy. Make sure that your credit score is as strong as you can get it. I always tell people, get yourself up into the 700s. I think 720 plus will get you the best paper, and make sure you've got some liquidity. You got some liquidity in the bank. The underwriters like to see that to make sure that you're solvent enough to be able to make these payments for a period of time, right? We call those reserves. So you want to have a certain amount of money that you can pay your property taxes, your insurance, and your mortgage payment with. So I think if you focus on those three things and making them as strong as you possibly can, you're going to see better rates. And look, you don't have to be a poster child in those areas. You can do your best with it and still get better than maybe the 7.7%. Okay.
Yeah.
Now,
And go ahead, please.
The other thing that you can do is once you're ready to strike and get yourself a mortgage on a property that you want to buy, have a professional like myself lock that rate in when you're about 30 days out from closing or less. Lock that rate in. So if the interest rates drop, right, interest rates fluctuate daily on the in the market. So when they drop, have that professional lock it, and that way you've got that rate that you can be guaranteed with.
Yeah, and another strategy that some of my buyers have used, and we hear out in real estate, are interest rate buy downs. If someone doesn't have the 20% to get that low prime rate right away, there are some strategies to lower an interest rate, maybe temporarily, or there are permanent buy downs. Do you want to speak to any products that home buyers can use right now to help position themselves either over the next few years or throughout their full mortgage?
You bet. Yeah, those buy downs. No, don't get glamored by that, because sometimes the buy down is not great if you don't, if you're going to be planning on refinancing next year or middle of next year, right, when interest rates may drop. Then the buy down may not be worth the money spent on it. But when you buy a rate down, you're basically paying a chunk of money to bring that rate down by, a quarter point or, a half a point or an eighth of a point or something like that. So you have to just kind of compare and see if it makes sense financially for you to do that. But yeah, the rate buy downs can be great. A lot of builders with these new houses are incenting people to buy those because they're offering the rate buy downs. And guess who's paying for the rate buy down? The lender is, if you use their lender, right? The builder is if you're using their lender. So that can be advantageous to you if you're going into new construction. But for a lot of people, you're out there buying a house that's on market. Will the rate buy down be something that you could benefit from? And the answer is you just have to look at the math and make sure that you compare apples to apples with it. But yes, I'm glad that you mentioned that, because the rate buy down is a tool that works very effectively in today's higher interest rate market. And sometimes if a seller's property has been sitting out there for sale for a period of time, you may get some of those seller concessions that can help with that rate buy down.
Yeah, absolutely. And using seller concessions is a great way in today's market to, like you said, buy down your rate potentially or help with some closing costs. So I think that's a great avenue to look at. And so we've talked about interest rates and kind of how we can work on those, but loan programs affect the loan people are getting as well, and kind of what they're going to be paying for that home. And I know you work with 200 plus lending partners. Do you kind of want to walk through why it's advantageous to work with someone like you who has that many lending partners, and how that can help someone really dial in what they need specifically for a particular purchase?
Yeah, I'd be happy to do that. I've always believed that having more in this industry is better, but could you imagine a consumer going through and talking with 200 lenders and trying to find the best deal? That's where my value really comes into play. My value is to educate you, to empower you with information, just like Austin. We make a great team from that perspective. What you choose to do on your own is up to you. It may involve me, it may involve Austin, it may not. That's okay. We've left you at a better place. But we have tools that Nexa has invested in to make this scouring of the 200 financial partners easy. Right? You're not going to wait days to try and figure out whether you qualify for a loan. or you're not going to wait days to figure out if you're going to get the best rate on the loan. You're going to get that turnaround fairly quick after completing an application, right? And we do a credit check, or we have you provide your a soft pull of your credit scores. So I think that again, the value is getting a professional that lives it and breathes it and can be out there batting for you and help you through that forest of the 200 different financial partners or lenders, if you will, and finding you the best products and services and providing you the education along the way and the communication of what's happening every step of the way so that there's no surprises.
Yeah, that's fantastic. Thank you so much. And one thing that I've been really impressed with is the fact having so many financial partners. You just have a variety of resources that you're able to help people with. And so I really appreciate that. I know clients will appreciate that. And thank you.
Yeah, you're very welcome. I appreciate being on the VCast with you today and sharing some of this information with your viewers.